Baby doll, look at you in your mittens over there. So I like to think multiple steps ahead of the game because I want to make sure that our crypto bags are going to go up eventually. And we don't know what happens in the short term, and many people get confused. So what's on the tip of everybody's tongue? It's the next action from the Fed. Are they going to hike? Are they going to hold? Are they going to cut? Well, luckily for you, I've done all the research already. The whole system's a Ponzi. It's one giant scam. The poor people get rinsed. And they're going to have to print money again. Now, the beautiful part, what comes next is a lot of people will stay on the sidelines and tell me why they can't print money. Now, instantly, a light bulb goes in my head. And I'm like, oh, thank God. Okay, good. If most people don't understand, that means their money is on the sidelines, which means they have not bought yet, which means, exactly, we have enough people who are going to lose money on the sidelines, and we have future buyers coming. That's always where we want to be. You want to be before the future buyers every single time. You always got to think about the people coming ahead. So the US Fed can do yield curve control. I have this chart, by the way. This is for some friendship credibility. I was making this in October and November 2022. Months ago, man, I made these. I was talking about this. Yield curve control, how it would work. Because I already knew something's going to crack somewhere. Something's going to blow up. US Treasuries, capitulation, something. And so many people say, oh, what's going to crack? And I'll say, well, I don't know. And so people discount it completely. I'm like, I don't know, man. It's like saying, hey, I'm going to give this guy 15 drinks at the bar, and I'm going to put the keys in his hand, and he's going to have a crash. Just because you don't know which street he's going to crash in doesn't mean that you don't know he's going to crash in. Do you get the point? So the difference between QE and yield curve control, it's very delicate. When they do yield curve control, they basically will limit the inflation to the people. This is what they want. So we're going to go through this here. So this is very important. So if you understand this, you can stay long crypto without having the worry that there'll be no stimulation, because, you know, most people will say, hey, they can't print and they can't do this and they can't stimulate because of inflation. This is completely wrong, right? So I can just quickly show you, right? Even in the S&P 500, I can show you in the past, right before the big fat mega crash of the GFC, you know here, right here, inflation was actually going up. Do you know that? How funny is that? Inflation was going up, friends. But guess what happened? They kept cutting rates anyway. And then bang, we sank to zero. Okay, so the Fed, inflation can go up and they're still cutting because they know. They know CPI is just a lot of bullocks. Okay, it's bullocks. People who believe in CPI, they don't wear their mittens. They don't have fluffy slippers. They don't wear their socks. They don't. Okay, but we do. That's why you got to stay long. So when they do QE, they literally go to the market and they buy bonds. If you're in crypto, this is literally the same as Tether gives you 1 billion Tether, and you just go to Uniswap and you just start market buying all the coins for us. That would be the exact same thing. We just send you Tether and you just go to every single crypto on Uniswap. You start going buy at market. Just buy. You start making the prices go up. That's what they did with bonds. But they won't do that next time straight away, okay? They're probably going to save that. What they're going to do is, most likely, yield curve control. Now, they might make a new name. Don't worry about that. They try to obfuscate everything. So with yield curve control, they won't buy the bonds at market. What they'll do is they will eventually place a limit order. They leave like a bid. So it's the same as if you're doing yield curve control stimulus on Bitcoin, instead of market buying it with Tether, you would just leave a big fat bid at like $17,000. You go, that's it. There is $150 billion buy wall at $17,000. You're effectively telling the market, you are not allowed to go below this price, $17 billion. And if you do, we're going to reload it and print. Good luck trying to do that. Now, they do this with the bonds to control the interest rates. And why they do this is very important. See, they want to keep inflation down, but they know things are going to turn. So I show you now here, right? QE, it forces the stimulus in, but yield curve control just stops the bleeding. Okay, but both of them, they're printing money. It's the same thing. It's just how do you use it? Do you go market buy or do you sell? So look, I've got the 10-year bond here, right? So do you market buy or do you limit order buy, right? So this is the 10-year note future. In the top, you can actually see where they were doing QE. I actually showed it here, right? So I have this cute square here. Look at this attention to detail for my baby doll friends. Where else do you get this? Show me. Show me that other pet duck named Greg is out there who does this for you. Look at this. They were actually market buying bonds up here. And by the way, all the Silver Bank or Silicon Valley, all these other trash stuff that's happening with these banks, this is how they got into trouble because they could not get yield. You see all these market buying up here? Well, they put rates so low, these people were forced to go to super long duration stuff. Okay? Now, when they're market buying, it forces the market up there. And look what happens when they're finally done. We'll just come all the way down. Now, this is from November, so the chart's kind of like done this, right? And it's gone up a bit. So, here's the thing, right? When they do yield curve control, instead of market buying up here, what they'll do is they'll place a bid down here on these prices. Effectively, it says, hey, the 10-year bond, you cannot go above the rate of like 6%. That's it. We're stopping you because it's too much pain. You cause too much drama. Okay? So this is eventually going to come. I want you to know that no matter what happens, we might see this throughout 2023, maybe 2024. At some point, this is going to happen. Right? Because there's a lot of destruction. People, think about it. Of all these banks and institutions, if they own these bonds, okay? These are bonds, okay? Bonds, these are the inverse of the interest rate. If they need liquidity, they have to sell these and we capitulate lower. Okay, it's very dangerous because it affects the loan rates. So if you want to go get a house, how is a retailer going to afford like 8.5% on a home, man? You're finished. The debt's way too high. It just crush you, put everyone in depression, right? The fiat Ponzi system, the shackle. That's what happens, okay? So this is why I'm showing you this. I want you to know that they have a plan for everything, friends. They have a plan. So you're just going to see, right? A lot of people are just going to tell you, well, you know, we can't go up or down because of, well, you know, the CPI and the inflation. No. Don't even think about these, man. These things, it doesn't matter what the price of Bitcoin is. I'm just letting you know. Right? In the future, every time we go up, oh, there'll be crash. Oh, crash. And each time, you will see people just capitulate at the bottom of these lows because they'll believe the narratives of they can't print money. And they are still printing money. They're doing that, okay? That's the con. So what you'll be able to grasp, right, the bullish undertone you have. So they're going to have to keep printing. And what they do is they plug the hole a different way each time, you know? They plug it from the left side and the right side and up and down. Every single time it's a new different word, but it's the same thing. They go to the computer, they change the digits on the screen, and they go, okay, that's it. We've printed more money in 2 seconds. That's all it takes. And that's how easy it is to plug the holes. So you're going to see, right, these different scenarios drawn up from everyone. And once again, it will probably be to FUD your bags. You just got to keep holding, man. Doesn't matter. Bitcoin, Ethereum, Hex, Pulse Chain, all the good stuff is coming. Everything's still coming. Don't worry about any of these in terms of thinking about, oh, should I sell? Because they can always stimulate. Because if CPI is too high, the inflation rate, you know, I can actually get the chart right here. This is the core United States core CPI. You can see it's spiked super high, right? So don't worry about any of these. It's always going to be different. It's always going to look bad. They can get this chart down, all right? They can get it down. It will go down over time. And the number one fear you will see is, well, maybe they won't print because they'll ignite inflation again. But what I just showed you is, this is why I showed you with yield curve control. This is why we already have a solution for that. Because with yield curve control, effectively, they don't want consumers, right, the poor people, us, they don't want us to go buy bananas, all right? The price of bananas, it goes too high if everybody feels confident to go buy out. So what they do is they say, hey, how do we affect consumers stop buying bananas? What they do is they influence you through your house price, All right, that's their number one goal, is to affect the house price. And so they keep the rates high. So even though they stimulate, what they actually do is they just stop the bleeding with this yield curve control. So effectively what happens is it says, hey, your home rate used to be 3%, right? Mortgage payment for America. Well, now it's up to like 7, all right? And what they do is they go, hey, we're going to print, but we're not going to market buy. So you're still going to be paying 7%. But what's going to happen is it's not going to get better than that much, right? That's the difference. You're not going to go from 7% back down to 2 or 3. All they say is, well, you're at 7%. You're at a 7% rate, but you're not going to go to 9%. You're not going to go to 10%. It's not going to kill you. So they win in both ways here. All right? They win by, they get to print, they get to calm the markets down, and by affecting the bonds, they can get this CPI down as well. Okay, so you get what's happening here. So, your next follow-up conclusion might be, hey, why don't they always do this? Why didn't they do this from the start? And now you understand, this is a problem, okay? When governments start doing this, they can't go away from it. Because what happens is, there are people who love buying bananas and have houses. There are people out there, they have like 3 houses, okay? And really, they should only have 1 because of artificial low rates and everything for all those years. And house prices went up so much, maybe not even worth that much, right? So there are people with 3 houses, they should have 1. But the government won't let the market clear. So when the interest rate of the US Fed, when it goes up to like, when they put it up to like 4 or 5%, maybe the real rate is meant to be like 7 up here. But there's so much pain here that they actually go the other way and they go back down. And what they do is they do this yield curve control to stop any further damage. But this is what happens, right? Remember, these people have 3 houses. They're meant to have 1. They get saved. So effectively, the government doesn't actually clear everything they need to clear. So these houses, maybe instead of them being 1 million each, and this person owns 3, maybe they're meant to be 500,000 each. You get it? And this person is not even meant to have 2 of these homes because the government never lets the rates get like that. And unfortunately, what happens is when they save everyone, so I'm going to delete, this is the interest rate little curve. When they save everyone and it comes back down, you effectively get a whole new wave of weak people. Hope this makes sense. So instead of culling that person from as the weak one in the pack and going, well, you had 3 houses, you should have only had 1, you're going to lose your job, your family's going to starve, and everyone in the street is wrecked. Instead of them doing free market stuff like that, when enough people are in the boiling pot together, they yell loud enough and they demand money printing. Now, what people don't know is, well, we do know now, when they demand the money printing, it makes everyone suffer. So that's why the perfect balance is yield curve control. It goes, well, so effectively, let's go back to this person with these 3 houses. They had 3 houses, right? They were worth $1 million. When they do this yield curve control, they can go, hey, man, you don't have to sell all your houses because that's turmoil. But that 1 million price, that's too much. What we want it to do, we want it to go down to like 800,000 or 850,000 for your 3 homes. And we want you to kind of go sideways for 4 years, kind of a reset. So that's what they do. So if you check the house prices, instead of the house price going up, instead of going like that, what they do is it comes down. They want it to slow down sideways. Okay. So instead of the market going like this, crack, up, down, crack, and doing volatility, you just follow that smooth yellow path. So that's why what happens over time is you get too many weak people. And unfortunately, what's been happening for the past 20 years is every leg of every business cycle, we add more weak people. And fundamentally, that's why, look, if you know all the business responses, that's why okay, the business cycle, they're going to have to print money. It doesn't matter what happens to the CPI. That's why, I know you see all these squiggly lines, but we're just playing for the big winner, man. One day, Bitcoin, crypto, Ethereum, everything. We're eventually going to go to, right? We have the better buckets. Our buckets have no leverage. We solve so many problems. It's so undervalued because no one knows what the hell's going on. We have so much fear and uncertainty around us, which means there's so many futures buyers to come. Okay? So don't let anyone fudge you out of your bags. And look, you don't even have to believe me. I'm just telling you, man. I've been speaking about this for so long. Look, I made this post. Friends, I made this post back in November, October. I made this when no one's talking about this stuff. No one has any idea. I already know what they're going to do. We already know. That's what gives you power. And I want you to also take it one step forward. Even though I know what they're going to do, I still don't sell and play around with the position. You don't do that. Because eventually, what's going to happen is enough people get wind, right? The whales get enough wind that the thing has to go up. The asset has to go up. Bitcoin, Ethereum, and crypto has to go up. That they don't sell big amounts. Instead, they buy. Because they also understand the next move of the Fed and the central banks, right? But right now, you see this turmoil. That's why I'm telling you now, man, the last position you ever want to be in is a position of weakness where you sold, you're begging for everything to come down, and you're reading all this bad news in the media, and you're wondering why the thing's still going up, okay? Until next time, friends, I'll catch you.